for what's going on in the real estate market right now, I had to do a show about buyers and what they could potentially be missing on. And also, I coupled that with the top signs, the top 5 signs that you're in an early spring market. Okay? Because the activity level that we've had, some of the things that have been happening, and I'm just going to skip ahead to number 4. The kind of the precipice for this show was weather. I mean, so skiers and snowmobilers, sorry, you guys have totally gotten effed on this deal. Okay, right? Like on this weather deal. But I'm a realtor first, okay? And so for realtors, right now, the weather pattern that we have, like our market can be influenced by that quite a bit. And the weather pattern we've had right now has kept activity at a very, very high level for January. So I did skip ahead, but one of the top signs of an early spring market that I put together was weather, because right now you can list your house and you can still take good pictures. Like we put a lot of new listings and stuff up the last 2 weeks that normally probably would have been waiting until mid-February. And some of those are already sold. Like some of those have already gone pending and are already under contract. And so I came up with kind of what we've been seeing the first 2 weeks of January. Why currently? Now, granted, this could change in a week. I mean, I did look at the extended forecast, and we're still in the mid-40s, it looks like, at least for the next week, which is an absolute gift this time of year. So I put down what we've been seeing and some of the top signs and what this means of why you're in an early spring market. Number one thing that I wrote down is more than 5 showings in a week on a listing. Okay. Like if you're in the first 3-4 weeks, of the year and you're getting 5 or more showings on a listing, that is more acting like a spring market. Okay. And so that is not normal for this time of year. So if you're looking at accurately priced listings and they're getting more than 5 showings, like that's an indication, an early leading indicator that we're in an early spring market this year. And I got to tell you, we generally, like there's a rule of thumb in the business that, that in the first, 2 weeks, if you have 10 showings, you're in kind of that price band. And this is different for different, segments of the market. Like it's a little bit different for $1 million plus or 750 to $1 million. But in general, you can look at what does it take me to get an offer? Yeah. And you're looking at that around that 10 showing mark. So you're getting 5 showings in a week on listings. That is early spring market material for sure. The second thing that I wrote down that we're not used to seeing in January, and that was multiple offers on listings. Okay. So buyers out there, they're not used to this time of year having to compete. Okay. And so when you get a listing that is accurately priced and it's January and you get multiple offers on that listing, there's something else going on in the market to do that. And so that is acting more like a spring market. And then partially, and we're going to talk a little bit more about this after the break, but partially some of that has happened because of our rate swings. And I mean interest rate swings. And so really the market was not expecting Trump to announce last week that they were going to buy $200 billion of mortgage-backed securities, right? And so we had not seen these rates. So it was funny because a week and a half ago, I said, this is the best rate that we've seen in 2 years. And then a week later, this is the best rate that we've seen in 3 years, happening. And so rates almost immediately overnight went from around an average of 6.125 to like 5.75 on a 30-year mortgage. And then 3 days later, we started seeing rates at 5.5. And so all of a sudden, you might have had a listing that's been on the market and not had 5 showings, not had multiple offers. And now the affordability window for those buyers changes in 2 days. That creates an opportunity for buyers. And right now, there is a big opportunity in the market for buyers when you combine all of this stuff together. And so if you've previously been priced, and that's why I switched the show to this week, because to talk about this, because if you're a buyer out there, you know somebody that's been trying to buy, and if you've previously been priced out of the market and have been on the sidelines, now is a time to re-engage and look at what you're doing, because you might have said, gosh, the house I really want is $350, but payment-wise, I can only afford $330. You do some creative stuff right now, or you're ready and you've been looking and you have the down payment. You do some creative stuff right now with the inventory that's out there, and you're going to be back looking at $350 or $360 in that price point, and with the ability to make these deals work. So
wow.
So there's some options out there, and that's one of the big things we've been talking about today, and that was what's the opportunity right now, Lance, for buyers, and what are some of the things that have happened on a national situation that affects local markets really all over, not just in Tri-Cities, but all over the United States. And that is that people were not expecting the announcement of the buy down, and that drove rates down quickly. Like, it takes a massive event like that.
Yeah.
Like executive order type massive event to drive rates down like that. So it was not on anybody's bingo card that rates were at 5.75. Just a month and a half ago, we had speculation if the Fed would do anything that would get the rates below 6. In fact, they were starting to indicate that there might only be one rate cut this year in 2026. And I tell you what, the way the markets responded, that doesn't even matter in comparison to that. I mean, to go down 0.5 point so quickly changes things dramatically. And then I came across my desk. I was at a closing this last week, and we've got one of our buyer borrowers that comes in with a 5.25 rate. Okay.
Wow.
And I'll just say shout out to one of our local credit unions. I mean, it's no surprise. This particular one was GISA, and I don't bank there. I don't, but I mean, our buyers go to a lot of different lenders.
Yeah.
But GISA had a 10-10, one arm situation to where you've got a locked in rate for 10 years. And they brought in that rate super, super low, right? To see a buyer close on a house last week at 5.25, we haven't seen that in 2 years.
Wow.
Unless the builder was buying the rate down. I have seen it. I take that back.
Yeah.
John, we need some editing. No,
okay.
I'm just kidding. We don't. I have seen it, but this was without a massive, massive buy down. And so what I'm saying is there's options out there, and I'm not a big, I don't beat the drum and talk about adjustable rate mortgages very often. They have a bad name because of the housing crisis of 2008. A lot of them were 1 and 2 year adjustables.
Yeah.
And that was a problem because people hadn't been in their house long enough. A 10-year fixed rate, when the national average people are selling between 5 to 7 years and moving houses, you likely might never run into that adjustable situation. And the advice is sometime in the next 10 years to refinance that at a longer locked-in rate if you don't plan on paying it off. So there's some options. So if you look at that, you look at what happened is the announcement by Trump drives rates down. Then you use a product like a 10-10 one arm, and you get an even lower rate. Your purchasing power in the last 2 weeks has increased tremendously.
Yeah.
People that were looking for $350 are now, for the same payment, looking at $400. People that were looking, at $300 are looking at $350, so they can afford a different caliber of house. I said at the top of the show, signs that we're in an early spring market, and I said you're getting more than 5 showings in a week on a listing. Why are you getting 5 showings in a week on a listing? because now you have a whole new pool of buyers you didn't have 2 weeks ago that are looking at your listing. So a couple things to note there is people are like, well, Lance, and I warn buyers about this because a lot of times buyers are like, I'm going to wait even longer to see what now if the Fed does cut rates, Lance, they'll be even lower. The problem you're going to run into is with the existing inventory right now, sellers like that in general, this just doesn't happen in real estate. They're not sitting around like somebody that has I'm not talking new construction, but somebody that has a resale listing.
Okay.
It's been on the market for a month and a half. This is not normal. This is not what people do. Because you get kind of locked in with the market. They don't say, oh my gosh, rates went down. I should call Lance and raise the price of my listing that hasn't sold. Like, okay, that's not a strategy that we're going with.
No.
I mean, I've gotten that call before, but it generally doesn't work out very well for the seller. So the sellers are sitting there locked in. And the buyers now have more purchasing power. So all of a sudden you're getting more showings.
Yeah.
And so that's why I've been busier than I've ever been the first 2 weeks of January, because we're helping a lot of buyers in that situation right now, and they're back out looking in the market. I mean, I had one or two on a single family. I had 2 clients looking for duplexes. The duplexes didn't cash flow 2 months ago. Now they cash flow. They can owner occupied one side and have a renter in the other side. Now that works. They can make that payment work. So we're busy in that situation, but this is a limited time situation because, like I said, the existing inventory doesn't make that adjustment.
Yeah.
The new inventory coming on next month and coming on in March, they will make that adjustment. So what does that mean in very simple terms? If rates stay where they are, home prices will increase, right? Because there's more buyer demand.
Yep.
So those increases aren't here right now. So that's the opportunity for the buyer. Builders who are running incentive programs, builders who said 2 months ago, we need to move some inventory over the winter.
Yeah.
So let's offer $10,000 closing cost credits to buyers. Let's give them free appliances and blinds. In March, those go away.
Yeah.
Okay, because the builder says, hey, you know what I noticed? We're getting a lot more activity all of a sudden. There's a lot more buyers coming through here. So more demand, same supply, they're going to raise those rates up. And so the market's going to correct, but it hasn't right now. That's why I switched the show up and said, I want to get the message out there, talk to buyers, this week. The other thing that just blows me away is that's also out there in the market that sometimes can be an advantage to buyers is we hadn't done a HUD deal in 4 years.
Really?
Right? Because everybody had equity. And so there weren't defaults. And if there were defaults, guess what? We just sold it, right?
Yeah.
Like, so they bought in 17 and 18. They got in trouble in 22 and didn't make payments for 4 months. No problem, Lance, because all we'll do is we'll just sell and we'll pay off those back 4 months of payments, and then you'll still leave with cash in your pocket. What's happening now? People bought in 22 and then didn't make their payments. And guess what? They don't have equity. So all of a sudden, HUD's starting to foreclose on some of these properties, and they're showing back up in the market. And we've had, I think we just got accepted, I think on our 3rd HUD deal in the last 4 months.
Wow.
Maybe 2, and we've got some offers out on another one. But to go from that in 3 months versus nothing in 3 years, some of those foreclosed properties start to come back on the market, and there's some good deals out there. Now, you have to be a registered agent to bid. There's some things you have to know about. It's not for everybody, but if somebody was interested in how to win those bids and get those deals, go to kenmoreteam.com, shoot us a message. We've got agents that have been through it recently.
Yes.
They know what hoops to jump through to get that done. So I mean, that was it. So here's a recap of the top 5. This is top 5 signs of an early spring market. More than 5 showings in a week on your listing. Multiple offers on a listing. HUD listings have returned to the market. Weather is rates on what's going on with interest rates. And then I threw a sixth one in there. I probably could have put like 3 more. So I threw a sixth one in there, and I said listings that have been sitting go under contract.
Yes.
So listings that have been on the market for 45 days, all of a sudden go under contract if it's an early spring market.
Mm-hmm.
Well, why is that? Because now we have 20 more buyers eligible that weren't eligible 2 weeks ago.
Yeah.
And so it's awesome. I got to tell you, once again, I'm a skier too. So once again, I feel bad for the skiers and the snowmobilers out there. But sorry, guys, sorry. To heck with those guys, because we are doing real estate like it's March right now and having a great time. So if you want to jumpstart your 2026, see what's happening right now on that. Take advantage of the demand if you're a seller. Get a deal while you're a buyer with some existing inventory. We'd love to talk to you. It's going to be a barn burner for at least about another 2.5 to 3 weeks.
Yes.
And so, we'll be right back here next week.